Welcome to ShortView Trading, your morning market hit for Tuesday, 1st of June. What matters today and this week for traders? Well, it's been a fascinating couple of weeks and markets have rallied quite nicely across many parts of the global financial landscape. But we're now at an interesting setup whereby all sorts of key markets are knocking on the door of the top end of recent consolidation ranges, i.e. knocking on the door of key resistance levels. Take a look, for example, at the S&P500, rallied nicely over the past couple of weeks, now back at the top end of the range that's been in place really since mid-April. That range, as you can see from the chart, is 4,100 up to around 4,210, 4,220 or so. As of this morning, we're trying to break out of that range. Equally though, it's not just the S&P500. If you look across in Europe at the DAX, it's broadly gone sideways since early April, as you can see from the chart in front of you now. And once again, is it back at the top end of that range? Whilst you can make similar comments about UK equity markets, as you can see from the chart in front of you now. Equally over in the US as well as the S&P 500, if you look at the tech space, that market is also struggling at a key resistance level. In this instance, that's its Fibonacci golden ratio retracement level. It's 61.8% resistance level, as you can see on the chart in front of you now. The Nasdaq rallied to that level and has struggled over recent trading sessions to break meaningfully above it and hold a level meaningfully above that. So there are all sorts of key levels popping up in key equity markets across the globe. But at the same time, there's good evidence that complacency is back in market prices. And of course, that's a negative for further upside. One way of showing that is the VIX chart. You can see the VIX in front of you now, a candlestick chart, with the latest move in the VIX taking it back to its mid-April lows, the lowest it's been post-pandemic. So that's a clear sign of fear being priced out of markets and markets becoming complacently priced. Other indicators that include the put to call ratio, which we like to use for 1 to 2 week market timing trades. As you can see, this model is now also back on sell, as market participants have taken off downside hedging and downside put positioning. So complacency is back in market prices and downside hedging has been removed. So if you look at our key short-term risk appetite scoring system, our fear and greed indicator, you can see that it's back registering greedy at its sell levels. So there's lots to be concerned about. We're at the top end of ranges in a number of key indices. Markets are increasingly complacently priced, and they're also looking pretty greedy to us with a number of our key short-term market timing systems back on sell. So really the question is, what's the trigger for the downside? And whilst it's always difficult to know, clearly one possibility is further, more sustained talk of tapering. The recent drumbeat of Fed governors beginning to talk about tapering is gathering pace. We had Kaplan last week, and that may well continue and may well cause the market to start worrying about the timing of tapering. But that's only one possible reason. There are all sorts of reasons. You've got ISM manufacturing this week, could surprise one way or the other and could cause some trouble in the markets. Equally, lots of other data throughout this week. So to see how we're playing this market, please see today's Daily Rag available to subscribers via the website. Equally, if you're interested in a free trial, please click on the link below and put in your name and email address, no credit card details required, and we'll send you the Daily Rag for free for 7 trading sessions. In the Daily Rag, each and every day we update our key market timing views on a 1 to 2 week basis on equity index futures, as well as all our key market timing models and our assessment and view of the market outlook. So what are we watching for the rest of this week? Well, there are all sorts of key things happening. One of the key data points is the ISM manufacturing survey out later today, Tuesday, 3 p.m. London time. This is critical and is a good insight into the pace of global growth. It seems to be turning down from its highs that we saw earlier this year. It'll be interesting to see if that trend continues when the data print comes out later today. Elsewhere, there's PMI services sector data for a range of key global economies out later on this week. That'll give another take into May's service sector activity across the globe. And then on Friday, of course, it's the key non-farm payrolls data out of the US. Elsewhere, lots of Fed governors and ECB governors speaking, in particular this Green conference happening at the back end of this week. There's also a G7 finance ministers meeting that central bank governors will be attending. So that's it from us. That's your morning market hit for Tuesday, 1st of June. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.